So I made a few videos on this channel talking about the bullish points on Tesla, and I think it's only fair to discuss some bearish points on it as well. In any investment that you do, whether it's Tesla or some other company, it's always a smart decision to look at both the bearish case and the bullish case. Maybe some of these bear cases we're going to talk about today will lead to more losses. Maybe it leads to a decline in sales. Maybe it leads to a decline in market share. Or worst case, maybe it leads to the demise of Tesla. So the bears actually refer to Tesla as TSLAQ, ticker symbol TSLAQ, and that's because whenever a company is going bankrupt, you attach the letter Q to the end of its ticker symbol to indicate that it's in a bankruptcy state. Anyways, this video is kind of created because I read a report this past weekend from a Tesla short seller, Tesla bear, and what I did was I kind of went through their points, kind of the highlights of those, and gave my opinion and addressed those points. Now, if you want to see the full report, it's only about 4 pages long. I will leave a link in the description down below. Check it out, download it, just take a read through it. It's always good to see both sides, but there are some points in here that I want to discuss today. So here's kind of a summary that I want to just kind of highlight the few points, and then we'll go through each of these points in this video. So the first was surrounding low expectations and that they were not responsible for pre-announcing a miss of this magnitude. The second was regarding demand, and demand has collapsed apparently. Third was delivery and production guidance is not credible. Fourth is that his defense in his contempt case is undetermined. And then the final point is kind of all surrounded around capital and liquidity. The first point being made is around low expectations not being low enough. And this is regarding their recent quarter results. And then they also go on to state that a responsible company would have pre-announced a big miss like this. Now, I'm not going to disagree here. Many large companies would have come out and announced if they were going to miss this badly on their earnings. If you remember, Apple recently in their last earnings report earlier this year, they came out and they revised down their numbers because they knew they were going to miss. They put that information out there before their earnings, and as a result, the stock adjusted accordingly. It is something that investors respect, and it actually shows that the management team is responsible, so this is a good point, it's a valid point to make. And I do hope that in the future, the Tesla, if they are going to miss this bad again on a future earnings report, that they just come out and pre-announce this, because there's no point hiding behind it. There's no point kind of trying to divert and kind of push it along to the side as far as possible, because eventually those numbers are going to come out. Now, in regards to the actual earnings, the numbers that Tesla reported, you can see here that EPS was actually negative $2.90 versus negative 94 cents expected. Revenue was around 4.54 billion versus 5.18 billion expected. So both revenue and EPS missed quite significantly, as we already know. But now here's a couple things to make note of as well though. Now if we look at hyper charts here, we can see that all metrics year over year are up. Revenue is up, gross profit is up, and losses have decreased. Of course, it's significantly down quarter over quarter, but keep in mind that the first quarter is generally weaker for auto sales than the last quarter in a year. And this applies not only to Tesla, but pretty much every manufacturer out there. From Ford's recent earnings, you can clearly see that they stated that in Q1, Ford sales shrunk 2% in the US, while industry sales declined about 3%. And Ford, although they beat on EPS, had a decline year over year in their automotive revenue, which was down 4.5% year over year, whereas Tesla's year over year revenue actually increased. So going back to that summary, I think a statement like demand has collapsed is extremely ignorant from this Tesla bear. Yes, demand declined quarter over quarter, but like we saw, so did other manufacturers. But when you look at year over year, demand increased substantially. A lot of people are going to say, oh, that's because they didn't have Model 3 ramped up last year. That's why the numbers this year are so high. Well, that's going to be an argument for pretty much any scenario here. Now, next year, the argument is going to be, oh, well, they expanded to right-hand drive countries. Now, countries in Europe are included in the number, okay? And the year after that, they're going to be like, well, now the Gigafactories opens, so now there's sales from China in the numbers. Yes, that's part of business, and that's exactly how a company grows. So I think that it's a pretty ignorant statement here to make that demand has collapsed, because I don't think it has. However, that being said, Model S and X sales did decline year over year, which is what they may be focusing on here, and this I will say is a valid statement. Tesla did announce that they will be refreshing these two models with a better range and performance, so let's see if this actually picks up sales in the back half of 2019. But either way, if you're referring to Model S and X, that's valid, but they never specified that. So with that statement there, if you're looking at Model 3 demand or overall demand of all their cars combined, that increased. They also made a jab here at Tesla Insurance, saying that it'll never happen. I think to make a statement like never really shows how closed-minded this Tesla bear is. And the funny thing is that they don't even make any references or an argument as to why this can never happen. All they say is that it's because of capital and regulatory reasons. That's not really an argument. I think that's a very weak argument. And in my opinion, a better way to kind of say this would have been to say that it would be very difficult for Tesla to succeed with this, which I kind of agree with here. It's not easy to start up an insurance company, especially when your capital isn't overflowing and abundant. So if they made a statement like it would have been difficult for them to do it, I would have agreed. But to say something like it will never happen just shows that they're being pretty close-minded here. And that's all I really have to say about that point. The next was in regards to delivery numbers and their guidance not being credible. So what I thought we'd do, just let the numbers speak for itself, look at Tesla's last few earnings and see if their guidance actually met what reality was. In Q2 2018, they were in line with Model S and X guidance, but they don't state anything on the Model 3, implying that they most likely missed here. In Q3 2018, Model 3 was in line, and Model S and X were in line with the yearly targets as well. This kind of implies that maybe Model S and X missed on a quarterly basis, but they were still in line with the yearly target. In Q4 2018, once again Model 3 was in line, and Model S and X again was in line with yearly targets. And the most recent earnings, Q1 2019, numbers were lower than expected. They did miss. However, they still reaffirmed that this yearly guidance that they have is still intact. This implies that Tesla does anticipate demand increasing in the back half of 2019. So do these numbers really give us enough of a reason to doubt Tesla with their guidance? Well, they have missed a couple of times in the last 4 reports, but they were pretty much in line for the most part when it came to their overall number. They aren't coming out and posting amazing numbers and beating guidance every single quarter, but as long as they're in line with what they target for the whole year, I think that's completely fine as an investor. You're gonna have some quarters that are up, some quarters that are down, but in the end, the average guidance for the year is what they're staying in line with here. And even with a weaker than expected Q1, they're still projecting a very strong 2019, implying that demand will most likely pick up in the back half of 2019. They did state that guidance for this upcoming quarter, Q2, is expected to be between 90 and 100,000 cars. And for a full fiscal year 2019, they expect between 360,000 and 400,000 cars. But Musk, I believe, has also said that he expects up to 500,000, but that's kind of an unofficial number here. The official number is between 360 and 400,000. So in my opinion, a statement like delivery and guidance numbers are not credible is a completely false statement, because as we saw from the facts, they are pretty much in line with what they say. The report also states that Tesla's guidance numbers are kind of assuming that the Tesla Gigafactory in China is going to be up and running by the end of the year as well. But they say from both a capital and timing perspective, they do not believe this will happen. Why not? Did you not see the recent headlines saying that Tesla's Gigafactory expansion is actually on track to break China's record for the fastest factory build-out, and the estimated date of completion is actually before the end of 2019. So we'll really have to wait and see how this plays out. It's kind of pure guesses here. The bears could be right, the bulls could be right, this could go either way. But from the facts that we see, it looks like we're on track to finish before 2019. The next point was in regards to Elon Musk's case with the SEC. And we already know what happened there. That case was resolved. And there are no fines. The only requirement is that Musk must have his tweets monitored. And the SEC has outlined what exactly Musk is not allowed to discuss in regards to Tesla. So I think this is probably like the best case scenario that could have happened, and it did happen. So that's another bearish case that's kind of put to rest now, nothing really to worry about. I know some of them are going to be like, well, it's less to go to the judge, but my argument to that is that the judge actually told the SEC and Musk, go figure it out, and they have, and they come to an agreement here. So I don't think there's any issues with this clearing. Now the last 3 points are in regards to Tesla's financials, and if you're a Tesla bull, this is something you want to pay very close attention to, because it is important to know the financial health of a company. And a lot of the jabs that the bears have been putting into Tesla are typically around its capital, its cash, and its debt. One of the biggest arguments in here is that Tesla's cash is dwindling and that they're relying on customer deposits to actually keep the company afloat and have a somewhat good cash balance. From this table, you can see that Tesla has a cash balance of around 2.2 billion, but if you subtract the deposit, it actually comes down to 1.4 billion in cash. About 35% of their cash is from deposits, according to this report. And although this is a higher number and this is seen as a risk, I will agree, I think that we're still pretty good financially, at least for now. I'll try to keep a close eye on this and make sure this number does not exceed 50%, because that's when it could start getting worrisome, because then the management team might think they have more money than they actually do secured and start spending more than they can actually afford to, and that's where we may encounter some big problems. So as long as it's around current levels, that's okay. I would like to see it much lower than that, but it is part of doing business, and it is something that's actually helping the company out a lot, and it's been working out so far. I don't see any issues if it continues at this rate. So like I said, just keep a close eye on that. Tesla also has two big payments coming up according to this report. The first is a $182 million term loan due by the end of this month, and the second is a $566 million outstanding payment that'll be due by November, which is a total, combine the two, of around $748 million in debt that they need to pay off. Now, if we take this payment and actually subtract it from their pure cash balance minus the deposits, that'll actually mean that they'll end up with around $625 million in cash, not counting the deposits. But one thing to keep in mind is that they are starting to sell right-hand drive cars now, and then they're going to start selling a lot of cars in China once that Gigafactory opens. So they're most likely going to be getting a lot more deposits and a lot more income from these cars over the next few months and years. The other big fear, which is still out there, is that Tesla is going to have to most likely raise more capital, aka take on more debt on the company. And on the last earnings report, Musk was open to this. I am seeing some news articles come out regarding this as well. So this is a possibility. It most likely will happen because Tesla does need to fund a few other projects that they're working on. And I believe that this will hurt shareholders and the stock in the short term. When you're looking at a long-term holding for this stock, like myself, I'm perfectly fine with it. And if it makes the price drop to $200 per share, I'll just be buying more. So yes, their cash balance is one of the worst I've seen out there, especially when it comes to large companies. However, they are growing substantially. I do not believe that demand has collapsed, and I do believe that Tesla is well on their way to becoming a well over $100 billion company someday. I really hope that this video shows you the other side of the coin. I tried to give my arguments for each one of those points. I know that there are some points that I agree with, there are some that I completely disagree with, but I'd love to hear what your opinion is on all of these points. Now, if you're new here, don't forget to subscribe and let me know if you want to see more videos like this. Drop your likes so that I know you enjoy these videos so I can create more like these. Thank you so much for watching, guys. Don't forget to invest positively. I'll see you in the next one. Peace.